Hello everyone, welcome back to Living Senior. Today we're diving into cryptocurrency, digital money you've probably heard about on the news, through friends or even your family. You might wonder, is it real money? Is it safe? Should I care about it for my retirement? The world of money is always changing, but you don't have to chase every trend. Our goal is to give you clear, honest information so you can understand what crypto is and if it's something you should care about. You've seen headlines about Bitcoin and Ethereum, and you may feel like you're missing out on some quick capital gains. But for every success story, there are many more of people losing their savings. That's why we need to approach this with caution and knowledge, not fear or hype. This is about your money and your future. Let's pull back the curtain and see what's really there. Promise yourself you won't make decisions based on hype or pressure. This video is here to educate, not convince you to buy crypto. By the end, you'll have a clearer picture of what crypto is, how it works, and if it fits your life, your budget, or your aversion to risk. Remember, you're in control of your financial destiny. Let's keep things simple and straightforward. No jargon, just the plain truth. We'll cover what crypto is, why it's popular, the risks, and how to protect yourself. Let's begin. So what is cryptocurrency? Think of it as digital money that exists only online. You can't hold a Bitcoin in your hand. It's not physical. It's created, stored, and exchanged entirely on the internet. Some use it to buy things, but most treat it as an investment, like stocks or gold. The first and most famous cryptocurrency is Bitcoin, created in 2009. The big idea, money that doesn't need banks or governments. Cryptocurrency is decentralized. No single person or company is in charge. Instead, a network of computers tracks every transaction using something called a blockchain. Imagine a public ledger, like a long receipt, shared with thousands of people. Every transaction is added as a block to this chain, making it hard to cheat or change. This technology makes crypto secure, but also complex and impossible to counterfeit. There are now thousands of cryptocurrencies, each with its own purpose. It's a very different kind of financial tool with unique risks and rules. You've heard stories of people getting rich from crypto. The value of some coins like Bitcoin has skyrocketed, then crashed just as quickly. This potential for high returns is tempting, but the price is extremely volatile. Bitcoin went from less than $1 to over $60,000, then dropped to $16,000 in a year. Today, in July of 2025, just one Bitcoin is worth over $160,000 US. If you had invested $100 in Bitcoin back in 2010, you would today have over $1.7 billion worth of this currency. But also imagine losing all of your savings within months or even days. This situation is equally as common as the huge gains seen. Both have happened to many. Crypto is driven by speculation and social media, not steady company profits. It's far closer to gambling than it is traditional investing. For every winner, there's someone who lost big. This is not a safe place for your nest egg or retirement funds if you don't have the disposable income. The thrill is real, but so is the risk. Most seniors can't afford to gamble their savings. We recommend you protect what you've worked hard for. But if you need to diversify and have some investment money that you are happy to lose, then cryptocurrency could actually pay off handsomely for you as a short-term investment. If you're still curious about crypto, proceed with caution, but remain interested and educated. First, talk to a real qualified financial advisor, someone who knows your full financial picture. Only consider crypto if you have money you can truly afford to lose. Educate yourself using reputable sources. To buy crypto, you'll need to use an online exchange like Coinbase or Binance. We've included a link below to Coinbase, a site where you can join for free and take a look before committing to anything. If you are familiar with share trading, then this site will be easy for you to follow. Before you invest, research which platforms are secure and trustworthy. Start with a very small amount, money you'd be okay losing entirely. Never use funds meant for bills, healthcare, or family. Treat it like a lottery ticket, not an investment. Don't get greedy if you have a small win. Once you buy crypto, you're responsible for keeping it safe. If you lose your password or send coins to the wrong address, and your money is gone, there's no bank or insurance to help you recover lost crypto. Be honest about whether you're ready for that responsibility. Let's look at the pros and cons, especially for seniors. Pros: potential for rapid high growth, 24/7 access. No need to wait for trading hours to open. And lastly, independence from banks. The price of crypto is less dictated by the decisions of banks and governments. But the cons are serious: extreme volatility, no government insurance, and complex technology. A simple mistake can mean losing your money forever. Scammers target people new to crypto. For most seniors, traditional investments like stocks, bonds, mutual funds are safer and more reliable investment, but with a much lower and slower return than that seen with many cryptocurrencies. If you try crypto, use only a tiny fraction of your portfolio, money you can afford to lose. Never make it a core part of your retirement plan. Your peace of mind is worth more than any risky gain. Stick to proven paths for a secure retirement. Don't let hype cloud your judgment. We need to talk about scams. Crypto is full of them, and seniors are often targeted. In 2022, Americans over 60 lost over $1 billion to crypto fraud. Scammers use fake investment opportunities, promising high returns with no risk. If someone guarantees profits, it's a scam. Hang up, delete, block. No government agency or utility will ever ask for payment in crypto. If anyone pressures you to use a crypto ATM or send coins, it's a scam. Crypto transactions are nearly impossible to reverse. Once it's gone, it's gone. Never share your financial info or crypto details with strangers. Be suspicious of unsolicited offers and don't click on strange links. Don't let anyone rush you into a decision. Scammers create urgency to cloud your judgment. If it sounds too good to be true, it is. Protect your savings. Don't become a statistic. Stay skeptical and cautious. Your money is worth defending. If you research crypto, you'll see thousands of coins. Focus on the 3 most established: Bitcoin, Ethereum, and Ripple. Bitcoin is the original and most valuable. Think of it as digital gold. Ethereum is the second largest, with technology that powers other digital projects. Ripple is a faster, lighter version of Bitcoin. Learning about these gives you a sense of the landscape. But this isn't investment advice. Remember, knowing their names isn't the same as knowing if they're right for you. What matters most is your financial security. Crypto is exciting, but it's risky and unproven for retirement. Safer investments, bonds, dividend stocks, index funds, offer more peace of mind. Always talk to a trusted advisor before making any moves. Be honest about your goals and fears. The best plan is one that lets you sleep at night. But if you're interested in at least seeing how these digital currencies fluctuate compared to traditional shares, click on our link in the description.